I've been a full-time investor for roughly 15 years. And so to qualify as a forever stock, it needs to be a stock that I've owned for at least half of that time and continue to own today. And it turns out there's only 3 stocks that are considered forever stocks in my portfolio. Today, we're going to go over the number one backbone of those 3. But first, I want to remind everyone it's starting on January 1st, 2026. All of my videos will only be appearing on my own YouTube channel. To subscribe to that channel, click the first link in the notes below. And by doing that, you'll be able to find out what Forever Stocks number 2 and 3 are, as well as getting my top 5 stocks for 2026, which is going to drop on January 1st. All right, without further ado, the stock that I am talking about today is Amazon. This is what Amazon stock has done since I bought it on March 31st, 2010. Now, I bought and sold much more since then, but here's the visual proof. We are talking about a initial cost basis of $7.07 or 8 cents, and it is up more than 3,000%. So why does it land here? Well, let's just look at the anti-fragile scorecard, and I think you'll be able to see fairly quickly. First off, with the company's mission statement, which is to be Earth's most customer-centric company. Now, you might think that that's not that important, but over the long run, I think it is, because it's very simple. It's inspirational, it's optionable, and it has been proven. So they get 2 points there. Now, the big part of an anti-fragile score for a company, the moat. There's 5 different moats to consider here. So how does Amazon stack up? Well, first, let's look at network effects. The idea here is that the more customers that go to Amazon's website, the more merchants want to list their goods on Amazon's website, and so on and so forth. It's a virtuous cycle. And the e-commerce is still growing double digits off of its already massive base. So they get 2 points for the network effects. Next, switching costs. Let me ask you, when it comes to switching costs, where are you going to get a better deal than Amazon Prime? Or if you use the company's web services, how hard is it to transfer away from AWS? The answer is very hard. It's painful. And if we look at the subscription revenue, that's already showing double-digit growth, even though it's working off of a large base. And AWS revenue has grown 20% in the most recent quarter, and that growth is accelerating. So 1.5 here. To me, this is the biggest moat that Amazon has next, which is low cost production. And it comes in 2 forms. The biggest one is logistics. No one can send a package to your door as quickly as Amazon can for a lower internal cost. But there's also the data low cost production, because Amazon collects tons of data on all of its shoppers. It's acquired relatively cheaply, and they can then turn that around and use that for advertisers. Now, on the logistics side, there are over 2,600 different sized fulfillment centers spread throughout the world. That is a scale that is unmatched. And when it comes to advertising revenue, that grew 24% in the most recent quarter, and that growth rate is accelerating. So they get the full 3 points for low cost production moat here. When we talk about intangibles, the main one that Amazon has is its brand. And it's worth noting that because of that brand power, the percentage of revenue spent on sales and marketing has gone down from 8.2% just 3 years ago to 6.9% in the most recent annual year. Now, I don't give them any points for counter positioning, but you add all of those points together, and we now have a new score of 9.5. After that, we move on to optionality. What is optionality? A proven history of finding new revenue streams that help fulfill a company's mission. And it's probably no company has done a better job of this than Amazon. And here's what I mean. They start out with their mission anchor, and they start with then books back in 95. They proved that they could ship trust in books. And then after that, they move on to Prime, where they could change behavior. Then AWS, where they start monetizing their own infrastructure. After that, logistics, where it's largely replaced UPS and FedEx. And advertising, the one that I just talked about, is where they're now monetizing eyeballs. Now, Amazon doesn't know exactly all the things it'll be selling in 2035, but it knows how it will sell it by having the most customer-centric focus, and that is optionality. So if we put those in and ask ourselves, well, what is on the horizon? Well, there is Zoox, their automated driving platform. There's Amazon One Medical, and there's Amazon Leo, which was previously known as Project Kuiper, their Internet Anywhere on Earth project. I would even argue that advertisements are still early on the S curve in terms of adoption. So we add that optionality in, and the score is already in the anti-fragile zone with a 12.5. But we're not done yet. Next, let's look at financial redundancy. When we look at that, we see the company has 94 billion in cash versus about 51 billion in debt. So they've got a huge net cash position. While their free cash flow is only $11 billion, it's worth noting that it could be much higher if we weren't in this AI infrastructure build out. How do I know that? Because their operating cash flow is $131 billion. That is crazy. And I don't believe that the company has a single point of failure. So that brings it to a score of 13.5. Finally, let's focus on skin in the game. Well, the founder is still involved. Jeff Bezos still sits as chairman of the board for Amazon. Insider ownership is above 5%. It's at 8.3%. And Glassdoor scores actually aren't that great. They're not going to lose a point here for 3.6 stars, but they're not going to gain a point either. So we add together all these points, and Amazon gets a score of 15.5, which is a very, very high score. It is the backbone of my portfolio. And that's why the verdict here is that it is a forever stock. Now, of course, there's more to this than just the company itself. For instance, what about Amazon's valuation? Or what about how much of your portfolio should be devoted to a company like Amazon? Well, for that answer, I point you towards my investing service, how Stock Investing Mentor. And here's how Stock Investing Mentor works. By becoming a member, there are three parts. The first is 1 hour of live weekly training sessions every single week. Two, full access to my portfolio, all the additions, trims, buys, and sells in real time with a video explanation each time I do that. And number three, 24/7 access to a private online investing community. If you are interested in joining Stock Investing Mentor, simply click the second link in the show notes below. So that's how Amazon ended up being one of my 3 forever stocks. Make sure to subscribe to my channel down below to find out what the next 2 are in the coming weeks. Until then, Brian out.